All right. Hey everyone, Mark here. Just want to make sure you guys can hear me. I want to do a sound check real quick. Thanks for joining me for another Greenbridge Investing market analysis. So as you can see with my little fancy title graphic that I made there, I want to talk a little bit about that swing trade long that we had in the pound yesterday evening, because there's an important lesson that we can learn from the type of movement that we saw in about 12 hours. Okay, also, of course, I'm going to be going over Bitcoin, the major markets, and stocks that you would like to see. So with that, let's get started. All right, hold on. Let me get this thing going here. So this is for educational purposes only. For investment advice, please consult a licensed investment advisor. Now, today is Wednesday, and as you know, we're in the middle of the week, and the market gave us an interesting bearish signal the other day. Now, before I get into all that stuff, I just want to mention, hey Nicholas, just want to mention, if you have stock symbols you'd like to see, put them in the channel now, so that when I get through my analysis and the point that I want to make, then we can get into your stocks. Okay, so that's number one. Number two, if you're new to Greenbridge Investing, please make sure you check out our website at greenbridgeinvesting.com. We have swing trade signals, as you're going to see here, what I'm going to go over with the pound, that we send out by text and by email. We also have portfolio management ideas. All right, you could just see our track record on our website, and we have analysis in our chat room and all that kind of stuff. Also, make sure you subscribe to this channel, so every time I do one of these, you get the email notification. And if you like the video, send me a like. Let me know that I'm doing a good job. All right, so let's get into this. Let's begin with the British pound. Another round with the pound, right? Because my clever titles, I'm going to get lots of views with that title. So here's the thing. What did we see yesterday on the pound? I mean, Andrew mentioned it in the chat room, right? He said the pound, he liked it as a candidate, as a long. Now, that was early in the day. The trade signal didn't go out till 8 p.m. Eastern time, all right? And around that time, about maybe 5 or 6 hours, but by the time it was 8 a.m., this thing was up 80 pips, okay? Now, our first target, by the way, was 26.50, and if you look at the high here, it's 26.49.8. This happens in Forex all the time. I don't know if any of you took this trade, but I hope you maybe, depending on the broker, that target may have filled or it may not have filled, okay? If it has not filled, then obviously you may still be in the trade and all that profit vanished, okay? But here's the lesson. So with Forex is notorious for this type of action where it'll go right to like a fraction of a pip of your target and not trigger, not fill. And, we can call it manipulation. We can sit here and complain about it all we want. The point is, that's just a fact of how Forex works. So there's two things. For one, we use targets purposely to reduce risk. If that target had filled, or if you had reduced your position by 1/3, if that target had filled, now you'd be sitting back, right? And you'd be like, oh, so what? It went back to break even. But the trade is green, even though it went back to break even. I mean, what's the price right now? 25.82. So it's like what, 10 pips in our favor, basically, like 10 or 12 pips in our favor now, as opposed to 80. But the point is, using targets along the way is a very effective positive behavior, because as the market continues higher, you're reducing risk. And that's the point that I want to make. People always want to go all in, all out because they want to maximize the move. They say, well, if this thing's going to go up 300 pips, if you have a target 300 pips away, why would I get out of it, 100 pips away? I want all 300 pips. But you see, that's not the point. That's if you have that mentality, especially on this time frame, you're probably going to give back a lot more than you make, and the occasional home run that you get, you'll be basically using that to make back, trades that didn't work out, right? Most of it. So that's why that's not a winning behavior, and it doesn't provide consistent returns over the long run. If you look at our track record on Forex, it's pretty good, and Forex is not easy to trade, all right? But we have, our methodology works very well with it. We're very patient. We wait for our spots. We wait for our setups. And then when we see the signal, we go. And that's it. Okay? Other strategies for Forex, like day trading and stuff, very hard. I don't know how people make money because you are forced to pay those spreads. You have no choice. And that really is a huge disadvantage in Forex, especially for day trading. They don't want you to day trade Forex. And the reason is the money comes out of the broker's pocket. So it's in their best interest for you not to win. And for you, when you lose money, that goes into their pocket. So that's why Forex is a much tougher game to play. Anyway, point is, use targets to reduce risk. And in this type of situation, again, if it's like a pip away from the target and you happen to see it, close the position, close your third, get out of 1/3 of the position. Don't sit there and say, well, I wanted that one more pip. Just take the money, all right? Or 2 pips, 3 pips. If it's hesitating and you're like 3 pips away, take the money. Don't sit there and, because then this is what can happen. It gives it back. And again, Forex is very noisy. Now, all right, so enough of that. That's the point that I want to make. Use targets and, don't expect home runs in these things. Don't get emotional. Now, where's the pound going to go now? Again, we had this beautiful pin bar, okay? This pin bar is also a higher low. Not only is it a higher low, but it's coming off of an important support level, right? This was an old resistance, new support, and price reacted there. That's a great sign, especially since the euro is very strong. So I would anticipate that even though we got this ugly candle, I would anticipate that this bullish momentum will follow through and continue, especially if we take out this high here. Okay, what is that, 2664? So basically 2670s, you start pushing that, this thing should be in good shape, and I would anticipate like the second and third targets, should be within reason. Remember, this is like gold, all right? For those of you that took that gold trade, we sat through a lot of noise for like a month before it went to its 100, over 100-point target, but it took a month. Now that pound moved 80 pips in less than a day. So this is like a pretty nice move. It doesn't always go like this. That euro trade that we're in, we've been in it for like over a month, and it just reached its second target, right? Just what, today or yesterday or whatever? It reached its second target. So these things require a ton of patience. You just have to sit in them and let them do their job. Don't second guess them. All right, so anyway, that's the pound. Any questions, please let me know. Okay, now let's get into the next thing here. Let me jump into Bitcoin. Actually, no, you know what? Since I have this group here, let's take a look at the NASDAQ, because this is another one. This is another one that's been interesting. When we had our podcast on Monday, I hope you guys checked that out. Our sound finally worked on that one. We had this gigantic outside candle, okay, this bearish candle. And earlier in the day when I was doing my video, it didn't look like this. It was a bearish pin bar at the time. And I'm like, wow, if that thing takes out the low, and it did it while we were doing the video, So when it closed and we had this gigantic bearish pin bar, it's like, wow, that's definitely a sign that, we may have that broader retrace coming, right? Now, the next day, it went somewhat lower. I mean, this is a big move on the NASDAQ. This thing touched what? What was the high here? 1172. So basically just over 11,000. And in a matter of one day, okay, one day, it went to 10,372. That's 700. That's a 700-point range. So it spent 2 weeks building like this 1,000+ point move, and in one day, it gives back like what, 50% of that almost? In one day. So that's what you're dealing with. I have to emphasize that because people don't realize how big this is. So going forward, what do we expect? Now, the bullish pin bar is definitely, a higher low, and it is a buy signal technically, especially with the way we trade with our methodology, our swing trade system. But there's a little problem here, and the problem is, we took out this high today, but the bearish pin bar, the bearish outside bar, we cannot ignore this. This is still there, and this is still in play, especially since today we got this doji. This is not what we should be getting today. The market closes in what, a little over a half hour, and we're going to get a doji. This is indecision. This is not the place for indecision if this market was going to continue to be strong. So going into Friday, it's likely that we retest the low, all All right, now will we make this lower low, and will that broader bearish movement continue? That I don't know. All I know is we have an inflection point here at 10,370, so we'll say 10,350, around there, and that will be a possible location to look for longs, okay? And if we go lower in reverse, that might be a good long idea. I'd rather, if I'm going to go long the NASDAQ or stocks or something, I'd rather do it in that location because you have this old resistance right here, 10,300 area, okay? Much better reward risk, and at least there's some potential that it attempts to retest the high, okay? As long as we're maintaining 9,700 right now, like that's a key support, and same with this level all the way over here. What is this now? We'll just say the 9,000 or 9,200 area, that general area. That's also the key support that the NASDAQ needs to maintain. These two inflection points will provide buying opportunities if we get the right setups there. So just some things to point out. As far as buying more stocks right now, you have to be careful, all right? Because this retracement, this broad retracement situation may not be over yet. Whatever you do, do not listen to news and do not listen to all that infotainment that they're just going to react to information because they just want your attention, and that's it. If their information was had any value, they wouldn't be putting it on the TV for free. All right, so that's the NASDAQ. Any questions, please let me know. Again, if you have any stocks you'd like to see, please put them in the channel. And so when I go through a couple of my symbols here, then I can get to your stocks. I really want this to be useful for you. Also, if you have any suggestions on what you'd like to see or how you'd like to see these videos improve, please let me know. You know, if you want to, you could put it in our chat room. You could share it here on the chat here. You could send me an email, whatever. I'd like to know because I always want to make these better for you. All right, so let's take a look here at Bitcoin. Now, Bitcoin, how's Link doing? Where's Link? Right here, 8.4. I don't know. Okay, let's get to Bitcoin. So Bitcoin is pulling back a bit, right? Look at this. This type of price action is going to get some bears excited. It always does. You know, you're going to go on some of these forums and stuff, and they're going to be like, oh, Bitcoin's a short. Oh, Bitcoin's going to 3,000 again. And all this other nonsense, right? Now, what did I say in the chat room yesterday about Bitcoin? I shared a chart in there, and I said, you know, because I was talking about this pin bar right here. I was talking about this bullish pin bar. And I said, you know, in this consolidation, in this range-bound market, we're going to get a lot of false signals, whether they're buy signals or sell signals. I mean, this candle is actually nothing. It's not a sell signal. It's just nothing. But we're going to get a lot of false signals and a lot of false starts until the breakout begins. Now, by the time we confirm that, you know, it's going to be on its way. It's not like we're going to find the breakout at the bottom, right? No one can predict where that bottom is going to be. Maybe it'll start off of a higher low from here. But the confirmations come when you start taking out these highs. The first high we need to take out here is 94.79, so basically 95. We need to close above that. Then we take out this one, okay, which is at basically 98 level. We start doing that, and especially if we do it quickly and it doesn't give it back, that's probably a much better confirmation and sign that this thing is on its way to breaking out. Now, keep in mind, that's going to require a strong catalyst, some news that will come out of nowhere. But my point about this thing is this: do not be misled by nonsense information out there. Pay attention to the levels and the location. They will give you the confidence to manage your position or wait for a better opportunity. Right now, we're still long from 92.25. There's nothing for us to do but wait. And what gives us a lot of confidence, which has been giving us confidence the whole time, is this consolidation, as we know, and I've mentioned this many times. This consolidation is a broad higher low relative to this broader structure. At some point, we're likely to get that push, okay? And that's what we're looking for. We're just patient, we wait, we don't second guess, we don't get confused by nonsensical information out there that's created to just get your attention and nothing else. All right, so that's Bitcoin. Let me take a look at gold real quick, because that's another major market. And gold Let's go to gold. Look at this thing. So gold is pushing, right? It continues to push. This is the old trade. I just kept it on there. For those of you that are new, we closed out at 18.15 and we had another target at 18.20, which I don't think that ever actually reached 18.20. Did it actually reach it? No, 18.18 is the high. That's Andrew's third target. Anyway, it's starting to hesitate a bit. I was open to taking a trade up in this area, but you know what? It's like there's just better charts out there. There's better locations. There's just better things to do. So I'm just going to leave gold alone. Let this thing pull back, okay? It may squeeze higher before it pulls back, but this is starting to get where, you know, when it's starting to look like this, we're starting to get that, you know, the risk of retrace really starts to increase. Now, maybe we push into those mid 1800s before we pull back. I don't know. We'll see. But I want to see a pullback. I'm waiting for locations, okay? So the first location I want to see is basically the 1780s, and the second location is the 1760s. It can do it, okay? Back here, we couldn't believe gold was pulling back here the way it was. It can do it for just any dumb reason. Just be patient, okay? We'll get that. We'll get the opportunity. There's no need to chase it. That's my point. All right, let's get into, let's take a look at the euro. I already covered the pound. That was like the primary thing. Now the euro is giving us a similar situation. Look at that nasty bearish pin bar. Now, here's the thing with the euro. So our euro reached our second target, okay? And again, good thing we have targets, because when it starts to do like this, this is not good. What makes this worse, you know, usually I'm like, who cares? But this is a problem. And the reason why this is a problem is because, actually, let me ask you. Let's see who's actually listening here. Who can tell me why this is bad? Who can tell me? I know there's like a 30-second delay here, but I want to know why this, you know, why this may be a reason to exit our we only have 1/3 left of the position. This may be a reason to exit. Okay, why? I want to know why. Why would we exit something like this? Who can tell me? There's a very particular situation going on here. Now this euro should have, you know, it was doing well, and this candle should be strong. Now we have till 8 p.m. or whatever, 5 p.m. Eastern time till it closes, and who knows, it may close stronger. But we close like this and we take out the low, what, 1390? So basically 1380, 1370. We start pushing those levels tomorrow, this thing may pull back again. Ankit. So Ankit says bearish pin bar at the top. Yes, bearish pin bar, yes. But, you know, we get these pin bars all over the place. And sometimes, you know, I'll see one and I'll be like, who cares? But why am I more concerned about this one? Now, you said at the top, Ankit. What do you mean by that? What do you mean by at the top? I'll let him answer that. Previous high, bearish pin bar. Bella, previous high. Okay, you guys are seeing it. Okay, previous high. You know what this is also called? A failed high. Failed. That's bad. You know what a failed high means? That means a bunch of traders jumped in and they all went long at the top and now they're caught. That's not a good sign, because now all those longs, when they're banging it out, they're going to be selling, and then you're going to have shorts jumping in and pushing it further, and that's when you get those nasty pullbacks. That's why, you know, if there's a failed high, this thing didn't really do that great, you know, here, and then we get this pin bar. It's like, you know, we locked in 2 targets. This may be, I'm going to talk to Andrew about it, but this may be worth closing, just taking the rest off. You know, it's green, take it. You know, we have these situations, like I said, Forex is very noisy. So, well, I mean, this isn't, well, I mean, this isn't really a lower high. It's more of like, well, if you're going to compare it to this high, it's kind of like a, I guess you can call that a double top. But this is not really the high I'm concerned about, okay? The failed high. Yeah, that's the concern. Failed high. So we'll see. We may send out that text, you know, exit euro. We may just send that out today. And if, you know, if you strongly agree with that and you're in this position, it doesn't hurt to take your profit. Just take the money, get out. If this thing turns back, you know, we'll find another opportunity. At least it's green, okay? Getting away green in Forex is a really good thing. Doesn't matter how much. All right, so that's the euro. So let's get into some stocks here. Bella, can you have a look at ACB? Sure. Yeah, ACB. Okay, this one, Aurora Cannabis. This one's been a pain, you know. I mean, I'm not too crazy about it, but let's talk about what's going on. This is a really nice move. Okay, in fact, because of the location here, look, you can still see my old trade that we talked about when that was before the reverse split, right? And the next day it's like at $7, and we're like, what happened? So and then of course it rallies, right? We were looking for this stupid move anyway, but this consolidation that we've had since then is just a giant higher low, kind of like Bitcoin, right? And now look at this candle. This is nice, okay, Bella. This is definitely nice. If you're long, I'm still in some position. Seems like a good move. Yeah, this is a good move up. It took out this high from a couple of days ago. Now, these stocks, like I said, they've been slow. They've been out of play for a while. But what you want to see is a break of this high right here, 15 and a quarter, and this thing's on its way. In fact, something like this, if you're open to it, this is not a bad place to add some. Okay? Because I mean, look, this thing's been messing around at 12. You have a little double bottom around here. What is this? Like, what is this? Like 11 and a half. So it's going to have to hold that. We talked about 12 previously as your key support, and it went slightly below. But as you can see, it holds there in the general area, right? We can't hold these things to exact prices. They fluctuate around levels. So this is definitely a good sign. I don't know how many shares you have, but like, for example, if 100 shares was your average position, maybe you put on another 30 shares, right, and have 130 shares now. Again, not a big deal. You don't want to go crazy with these things because they're not the most in play right now. What's the potential though? Your risk ethic is pretty limited here, right? This thing goes back to like 10, then you should probably be reducing your size at that point and still give it a chance. These things you just have to give a chance. That's the kind of play they are. Now, your potential right here is about $20. So, how long can that take? Well, if there's some news in this thing and they start driving these, it can get there in a week or two. So maybe like, 18 to 20 area would be a good place to measure your potential from. And the risk is basically like what, $10, $10 price. So, you're risking like basically $2 to make 4 or 5. That's definitely reward risk. It definitely makes sense. It's just these stocks are a pain. So if you're patient and you want to deal with that, that's cool. But I like this setup for sure. I like the structure. I like all of that. Now remember, CGC is the leader. Let's take a look at CGC real quick because that's the leader in this sector. And oh yeah, look at that. Okay, so it's reacting to CGC. But here's what I mean by a pain. You had this nice candle the other day. Well, I think that was Friday or whatever it was, followed by the bearish pin bar. Looks ugly, and then we get the buying following through. This is a great sign, this buying follow through, by the way, after a bearish pin bar, because that means you probably had shorts pile into this thing, day traders, and they're getting squeezed. So, because I mean, who trades CGC? Mostly, it's a generally inexpensive stock. This is a big one with day traders. So, a lot of noise. This is a good sign. We take out this high right here. This basically 18 and a half. We close above that. If it can do that, I think this thing is back on its way to 20. And hopefully, since we get this broad higher low here, hopefully we make that new high above 24. I mean, that's what we're looking for, okay, in something like that. But the structure is there. The only thing that's not really with these are the fundamentals. But you have the price structure and you have this higher lows. They're coming off. Look at this nice pin bar it's coming off of. So I like it, okay? So you should be okay with that. Just be patient with it. Okay, so thanks for asking. What else? Do we have any other stocks you would like to see? Anything else? Andrew mentioned one earlier, and it was called SE. He may have spoken about it in the chat room, and I'm not familiar with this stock, and he was asking me what I thought. Now look at this thing. I could see why he liked it. Now, are you guys familiar with SE? He was seeing this bullish pin bar. Nice. This is a pretty simple pullback followed by a bullish pin bar. Now this trend is clearly bullish, right? There's no question. That's a bullish trend. Now, it had this buy signal earlier today. Now what I'll tell you is this is one type of signal. This has some potential to run Now, obviously, this is not the cheapest stock in the world, right? It's a little bit more expensive. This thing has the potential to test like the 130 area. That's how you're measuring your potential. That's within reason. It could, in theory, it should go further because higher lows lead to higher highs typically. But what I don't like about lone pin bars is sometimes, they're hard to trade it in my opinion because they can be very noisy. I prefer to see like a second candle, maybe a little mini double bottom, an inside bar. That's what I prefer to see in these situations. See like over here, you had your first inside bar, and then the second one kind of gave you a little follow through, right? And if you took out those lows of those inside bars, that would have been a bearish situation, but instead you took out the high, okay, followed by another inside bar. So there was some opportunity there to play that. I would like to see at least see something similar over here. And again, the other risk with these, sure, right, I like to see some consolidation, Ankit. The other risk with these, and I don't know if this is a market stock, because again, I'm not familiar with it, but since it sounds like it's a transport stock, it's probably, and plus it's 2 letters, so that means the New York Stock Exchange is probably in the Dow, okay? If the S&P pulls back, basically, and the Dow will probably feel it too, this thing will probably be sensitive to that. So that's something you have to consider. There are some stocks, like Michael asked a question the other day, when we were calling for the shorts in IWM and the UVXY, and he said, why aren't we exiting the stock positions, which we eventually did. But the answer was because not all these stocks follow the market all the time. So you want to know which stocks are more sensitive and which ones aren't. And you can kind of tell by sector a lot of times. Like a stock, and like the cannabis stocks, that's one good thing about them. They're not as sensitive. They kind of do their own thing when they get going, just like the biotech stocks right now. All right, so let's take a look at GTLS. GTLS, ooh, Chart Industries, okay. That's GTLS, huh? I'm not familiar with them, but let's see. I mean, right off the bat, bullish, right? Bullish, at least since March. Nice bullish structure. You have higher lows, higher highs. You're on a high right now, and you have this, they call this, there's a couple of names for this. You can call this an island reversal. You can also call it an abandoned baby. That's probably a politically incorrect name, but that's what this would be called right here, and not a good place to buy. This is also a candidate to be a failed high if you take out tomorrow's low. So Hamid, yeah, this is great structure in general. I like the overall situation, how it's developing, but I don't like this location, not for a long anyway. As a short, these are tough. If I were to short something like this, I'd prefer to day trade because I don't like to take risk. I don't like, it's a counter trend trade, and who knows, it may not pull back. If there's some really strong news, obviously I had this gap here today. So that's why, on smaller time frames, your risk is smaller. Obviously, you have to know what you're doing and understand the magnitude of your time frame. But in this situation here, I would just leave this alone and wait for a pullback. Your first support on something like this, you have one here, this old resistance right here, which is kind of tight. What is that, $50? So if anything, Hamid, $50 may be a better place if you're interested in a long. If that's cleared, because again, I don't know how this thing will behave if we get that broader pullback. The stock market is uncertain right now. We don't know if that stock market's going to follow through, or if the bearish momentum is going to come back. We have to see what happens tomorrow and Friday. But here's the thing: this is your next support right here, okay? Which is what, $40. That's a much more attractive area in my opinion to be looking for a long. Of course, this market would have to it can't give you just a simple pullback and go. I'd prefer to see a structure after a pullback like that, some sort of pattern. Like Ankit said earlier, some kind of consolidation. Notice how it pulls back. It gives you a little triangle consolidation, and then it breaks out, right? Consolidation back here too, consolidation back here. That's what I like to see. So I would wait for something like that, okay? Thanks for bringing that one up. It's interesting. Okay, who else we got here? Bella. Andrew mentioned that tech stocks rotating out to non-tech stocks. Also, a few long-term. Is this based on that S&P 500 outperforming the NASDAQ? Okay, so is this based on that the S&P outperformed the NASDAQ 100? I'm confused. When did it outperform the NASDAQ 100? I thought the NASDAQ 100 was outperforming the S&P. Unless I'm not understanding your question. But he likes to, he follows a lot of the fundamental stuff, and he follows a lot of, what fund managers are saying and doing. And there is a thing to rotation, right? He mentioned rotating out of non-tech stocks, and you'll see money flowing into certain sectors, for example. And there is a thing called sector rotation, where money will flow from one sector to another for whatever reasons, right? Maybe because of where we are in the business cycle, this other sector is poised to do better, business-wise, right? So the money will move around for reasons like that, and you'll see certain sectors go while other ones just go nowhere. So it's good to be aware of that. That's a little bit more of a broad economic view of things, and I'm focused more on short-term technicals. So I would just look at each individual stock, Bella, and see what the chart is telling me, what the price structure is telling me. If the whole sector, like for example, like the semiconductors, if money starts leaving the semiconductors, we'll see it across the board. We'll just see it. Okay. So good question. DJ, GTLS makes heavy machines for production. Oh, okay. Great looking chart. Great looking chart. I have the stock. I don't know to sell. Okay, so Hamid, well, I'm imagining you're in from a good price. I'm guessing you're not long from this price. Here's what I would tell you. In a situation like this, you have a stock that's doing well and you get a nice move like this and you have a gap and everything else, the best thing to do in these situations is to take a portion off the table. If you're green, it never hurts to take something off the table, whether it's, I'm going to use 100 shares as an example. If you have 100 shares and you're up a nice percentage, it doesn't hurt to take 25 shares off, okay? And let this thing run. This thing's strong. So yeah, you may have your pullbacks and this and that, but until it proves to no longer be strong, you should, it's a good habit to let a portion of it run until the market gives you a really compelling reason to get out. And something like that would be, for example, you take out like a key support, like this one here, 37.98, 38. You start pushing those supports and closing below, then the thing's probably having problems. Now, I wouldn't expect that in one candle. You'd probably get that over a series of lower highs and lower lows, and you'll probably have plenty of opportunity to reduce your position as the market, if the market does something like that. But at this point, you have to at least let a portion of it run. If you're uncomfortable and you're like, well, I have a nice profit and I'm not sure, then take 50% off. Take in something so that you won't worry about what this thing does. And if it continues further, you still make a little. The mistake you should not make is, and I see people do this all the time, they get out of 80% of their position. The thing goes a lot higher, and like, why did I get out for? I'm losing money. That was so stupid. Next time I'm going to hold. You cannot do that to yourself. If you're in a portion and the thing keeps going, that's just extra money that you would not have had before if you closed your entire position. Okay? It's all about managing risk. It's not about profits. We're all here like, sure, we want to make money. Right, that's the whole idea. But if you focus on chasing money and trying to maximize, I need to make, this much money and it's going to go up to here and I want to hold it, that's when you run into problems. Okay? And it's really a psychological barrier or psychological obstacle, I should say. So that's what I would suggest with something like that. Take a portion off enough so that you're comfortable, right? That's a personal preference. You have to use some discretion on that. I can't give you advice, but that's how I would handle something like that. When something's strong and it's going well, take something off. Especially that's a nice gap right there, okay? It's just, this thing, when it does something like this, the chances of pulling back are greater. Like I would not buy this. So by locking in some profit, you are capitalizing on retail investors who are buying that peak, because I don't know who else would do something like that. Okay, so good question. Okay, cool, DJ. So Bella, today S&P 500 seems stronger. Oh, okay, Bella. All right, good observation. You can't look at their relationship on a day-to-day basis. you have to look at the broader picture, right? So let's kind of look at that. Let's look at the S&P and the NASDAQ just today, okay? Let's take a look at just today. Oh, let me get my S&P chart up here. It's important that you have to look at a more of an overview, because day to day the relationship can change, and it could be very noisy. So here's the hold on. So here's the NASDAQ, right? This is the Qs, the QQQ, and as you can see, it's like right? Not a great day there. And let's take the S&P. Oh wow, look, the S&P, right? The S&P is doing much better. But here's what you have to understand, Bella. On a day-to-day, that doesn't really mean a whole lot. This is what you have to look at. You have to look at the bigger picture. And now look, the S&P is still struggling with this resistance, okay? And look where the NASDAQ is relatively. That S&P is struggling in this area. Look where the NASDAQ is. So that's when we talk about relative strength, the NASDAQ completely outperformed the S&P, because the S&P is relatively much lower. They're clearly not moving together, right? The S&P should be at dramatic new highs, like the NASDAQ is. So again, look at this S&P chart, okay? And then like when I go back to the Qs, right? Back to the Qs. Look at the Qs. So the peak that I'm using as a reference here, the peak, look, this is the peak, okay? Now, do you see that difference? Do you see that? Look at this peak. The NASDAQ is like way up here, and this S&P is like having a hard time with this resistance. That's not a good sign. That's relative weakness. Why isn't the S&P way up here? It's because most of the stocks are not participating. That NASDAQ 100 is all Amazon, Google, Apple, Facebook, Netflix. That's what's driving. That's why the NASDAQ is up here, and the S&P is like, That's why we tried to short the DAX the other day. It never triggered, actually. But that's why, because the DAX and the IWM and the Russell 2000, they're also in these similar relative weak positions. Now, is the S&P weak? Well, no. We have this higher lows and higher highs. The S&P is not weak, but compared to the NASDAQ, it's relatively weak. And relative strength and relative weakness, that's a concept that may not be so obvious. But the idea behind it is, if the NASDAQ sells off, this thing is in a position to sell off faster, because it's weak. It should be higher than this high. Why isn't it? So I'm glad you brought that up, because that can really help you in terms of perspective and what to anticipate. That's why when we saw that outside bar develop the other day, we were such in a hurry to get short, because we know that these things are going to get hammered, or they're in a position where their likelihood is high to get hammered if that S&P has that, if the NASDAQ has that broader pullback. Does that make sense? That's a good question you brought up. Okay, so great question. Do I have any other stocks you'd like to see? Any other markets? How's Jumia doing? Look at this, right? Herd mentality, and it's trying. This is another, again, day traders are all over this. Look at this. Look at these tails, and I'd still avoid this right now. I'd avoid that. What's the other one? Workhorse. These are all the nutty ones of recent time. Look at this. Oh, nice consolidation there. Look at that. Okay, not bad, not bad. This thing starts to push, you at least have some attempt. You have some potential here. Okay, cool. Yeah, so great questions. If you guys have any other questions, please feel free to share them in the chat room. Sometimes I don't see them, so if I don't answer it, just ask it again. Sometimes like the question goes by. Otherwise, yeah, I'm going to wrap this up. The market's about to close. Thank you all for your participation. I always appreciate that. Again, if there's anything that I can do to improve these videos or make them more useful to you, please let me know. Okay, I would like to do that. Otherwise, if you're new to Greenbridge Investing, please check out our website at greenbridgeinvesting.com. Check out our swing trade signals and our portfolio management ideas. Oh, sure, Upwork. Sure, Hamid, I'll take a look. And check out our chat room. Sorry, for Hamid, I'll do this. Hold on, real quick. Because I know there's a little bit of a, there's like a 30-second delay here. Hold on. Let me get my let me get the chart back up here so you guys can see. Okay, so Upwork. Interesting. Well, look, now this is a great example of a failed high. Well, actually, this isn't really a failed high because it went way too far. But it came. But the thing is, it came back just as fast. This is almost a failed high. This is a tough trade because if you took this as a breakout, like this sucks. Okay, when it does something like this. So with this kind of bearish momentum, the fact that it gave this all back like in one candle is a red flag for me. That means all this buying was hot air. How much is this stock? This is an inexpensive stock, so this is definitely a day trader type of stock. I would hold off on this because the fact that this gave back so quickly, you're at a support level, potential support level, old resistance, but there's no stability at the moment. You don't even have a pin bar. You don't have anything here. So I would wait at least for a little, like maybe a smaller failed low, or maybe you test a lower level and get a double bottom along the way. I'd wait for something like that. I mean, the stock is generally strong. I'll give it that. But I don't like this recent pullback. There are stocks with much better configurations out there. Okay. So cool. Thanks for bringing that one up. All right. So now I'm going to go back into my wrap-up speech. All right, guys. So yeah, I've been at this now long enough. So thank you again for all your participation. And again, check out, if you're new to Greenbridge, check out the website. Make sure you register or you like this channel and subscribe to the channel so that you get notifications when I do this. Okay. Otherwise, I don't think you guys like it. You know, I'm like, man, I'm doing all this and no one likes it. So anyway, thanks a lot, everyone. Enjoy the rest of your day, and I'll see you next time. Thanks for watching.